Thank you for joining us for this episode of Manufacturing Talk Radio. I'm Tim Grady. I'm here with co-host Lou Weiss, who is also the sponsor of this show through his company, All Metals and Forge Group, a manufacturer of open die forgings and seamless rolled rings, and also a participant in the global survey, which Norbert Ore, our guest, puts together as he looks at purchasing managers' indices around the planet, and some very interesting regional ones in the United States. Norbert, welcome back as our senior correspondent to Manufacturing Talk Radio.
Thank you. Good to be with you.
Good seeing you again, Norbert.
Thank you. Thank you.
You're looking chipper as usual.
So, Norbert, the flock of starlings seems to have moved in your scattergram, which if people will come to mfgtalkradio.com, we'll have it there. They can see it. They can also find it in our Manufacturing Outlook e-zine. But the flock seems to have moved from the upper right to the upper left. What's going on?
Basically, it's taking advantage of a four-quadrant analysis, and it's saying, is manufacturing growing based on the index for a certain location, or is it declining? Is it getting stronger, or is it getting weaker? And so this month, what we've seen is a reversal a little bit of last month. Last month, it showed growth, and it showed it getting stronger, so growing faster. This month it's showing growth, but it's not growing as fast as it was last month at the same rate. And that's really the story. Are we starting to peak out in terms of the strength of the recovery in manufacturing? Or for instance, some of the we have the Chicago survey that's partly services. It's showing where the strength is in doing that. So it's a good indicator as to what's happening in the sector.
Okay. Now, you had mentioned when we were chatting pre-show that manufacturing and services, the two reports that come out of the ISM, and part of what you look at along with other surveys seem to be kind of in tandem this particular month. What's going on there?
Yeah, interesting. The services index came in at 58.7, and the manufacturing index came in at 58.7. That's a fairly rare occurrence that both of them move at the same rate. And so I find it interesting to look at what's going on. First of all, let me say, manufacturing typically, the PMI averages over time about 52.5 to 53. The services sector, the PMI averages 54.5 to 55. So there's about 2 points difference typically. So when you see those two meet, it says to me manufacturing is growing a little. 58.7 in manufacturing is more positive than 58.7 in non-manufacturing. So we're seeing that that take place, and so I think it's worth talking about a little bit. Where's the commonality between the two of those right now? Because services is where the jobs are, and jobs is where the action needs to be. If we're going to see this economy continue to strengthen, it's got to create jobs, and so we need to look at why that happens. If we look at new orders, we find that that's, as far as services are concerned, excuse me, it's 61.8. As far as manufacturing is concerned, it's 61.1. So there again, they're moving in tandem right now from that. Employment in manufacturing is at 55.2. In non-manufacturing services, employment is at 52.6. There we see we're not creating jobs in the way that we need to move forward and create more jobs associated with it. If you look at inventories, inventories are far more important in manufacturing, but yet service businesses, distributors, warehouses, you have a good many materials and purchases, inventories in those segments. Then we look at prices. Prices are up in both services and manufacturing. Good question, I guess that I'll ask. Do we see that services tend to try to start the year as manufacturers do with a price increase? Manufacturers have historically always preferred to try to get a price increase because it gets into the budget for 12 months.
Right.
And it also, if you can sell a price increase in January, you also may be able to sell one in July. That if the market tightens up a little bit, that they're able to do that. Now, pricing is the toughest thing there is in business, in my mind, to decide how much to increase prices, if you're going to, how much to decrease, whatever the amount is that you're looking at for that. So I don't know, Lou, am I on the right track with that in your opinion?
Well, we use a dartboard.
Oh, okay.
No, you're
So
100% right.
that's some more of that follow the science stuff, right?
Right.
Okay.
Their company's new budget comes out the beginning of the year. They need additional revenues to help support that budget. So
Right.
typically, that's when you see price increase.
Yeah. Well, we're seeing certainly, but one of the charts that we do shows supplier deliveries. And when supplier deliveries extend, prices get more support than they would obviously if supplier deliveries were contracting. And so we look at that, and it's close to its peak. Typically when prices come down, they come down very rapidly to find their level. And, one of the questions I'm getting a lot about is, well, what about inflation? Where does inflation figure into all of this? And my experience is inflation is more about wages than it is about materials. Materials have to be sold at market. If the market's tight, you pay more for them. If the market's softer, you pay less for that. Wages, you don't get to do that in most cases. You can't pay your people less because business softened up. And so I worry a lot more about the action of government and also the wages that people are paying as sources of inflation. Right now, with interest rates as low as they are, I don't think we have a big worry about inflation. I'm worried about inflation once interest rates go up because, housing right now is super strong. I talked to one of my sons who lives in Pensacola, and he said that whole area along the Gulf Coast has like a 3-week inventory of houses on the market.
Wow.
And so what's driving that? Cheap interest rates. People are looking at it and saying, hey, I was thinking about buying a house for rental purposes. This is a great time. If I can borrow money at 2% for 30 years, there's no way that can be a bad bet.
Yeah, that's right.
And so we see that happening.
Did you say Pensacola?
Pardon?
You said Pensacola?
Yeah.
I got to write that down.
Well, almost anywhere in Florida right now is a good guess. You can pick more of a garden spot than Pensacola
I'm sure.
to go with that. But we see these things moving together. We know employment has to pick up. And so those are the signs I'm looking for is what's happening to inventories, what's happening to employment, what's happening to prices, just the fundamentals. And right now, the fundamentals are really good.
Are they as good in Asia as they are here in the U.S.?
They are not. They are not. Parts of Asia is doing extremely well. As you know, I quite often talk about Taiwan.
Right.
And where they are. Get this. Taiwan manufacturing PMI is 65.1.
It's huge.
New orders are 68. Production 67. Employment 58.5. Deliveries are 73. And so Taiwan is doing extraordinarily well. And who else is that good? Frankly, not anybody. And I think one of the reasons Taiwan and China have this relationship where it's okay to hate each other publicly, but they really want to get together and they work together. I think I've been to Taiwan like 7 times in the last 10 years, and I've been amazed at how strong the economy is, the amount of innovation that's coming out of Taiwan. It's just a very strong economy. And I think the reason for it is the Chinese, when I've been over there, I see these tourist buses, and the tourist buses are full. Well, guess what? Those are all Chinese mainland tourists that come to Taiwan to tour in a country where they don't get along politically at all. So I think it's a good indication that China is doing fairly well, but the numbers don't change in China as easily as they do in Taiwan.
No doubt. No doubt.
You know, Singapore has struggled mightily, and they've finally made at least to where they're not declining month after month. So that's held up fairly well. South Korea has a highest expectation for manufacturing since 2014. So very strong for them. India 57.7. So there's some high points. Vietnam, Myanmar, the ASEAN countries, they're not doing as well. They're slightly above 50 in most cases, not seeing the strength because they don't have a local consumer market that's that strong.
Right. Well, Myanmar has bigger problems.
Right.
How are things going in Europe?
Europe is doing extremely well. Again, some more statistics coming out of that market. You had, let me see my note here. Okay, here we go. The Eurozone, which is the top 8 countries out of 24 in Europe, their PMI came in at 54.8. That's a very strong reading for those 8 countries. But more exactly, the Netherlands has the highest reading in their index in 28 months. Italy, highest in 34 months.
Oh, good for Italy. Yeah.
Austria, 26 months. France, 6 months. Greece, 4 months. So obviously, and I have to come back and add the UK. They're at 54.1 when the rest of the euro is at 54.8. So it means the UK is holding up quite nicely, and their 54.1 is the third weakest month that they've had recently. There's a lot to look at in terms of Eurozone and what can happen with it.
Well, I think you and I were on the same page, Norbert, with Brexit. And, when it happened, it was not going to be a big deal. It was a lot of, much ado about nothing, as Shakespeare would write. And I think that's the way it's turning out, isn't it?
Yeah, I can't remember the exact Shakespeare quote, so I won't try to do that. But methinks Shakespeare was right about a lot of things.
So, Lou, how about your favorite country, Brazil?
Yeah, tell us about Brazil. I was going to actually switch to Switzerland with a 59 point something. They really turn out great charts. So,
Brazil is in the 60s in January and still close to that as going forward. Brazil seems to be the one South American economy that can generate growth and consistently get some growth out of it. They struggle with corruption, but then again, who doesn't? But Brazil is, if you're going to bet on South America, you'd want to bet on Brazil as being the one that would be the best place to be.
It would certainly help if they cleaned up their corruption and political issues down there. We did that. We actually opened offices down there several years ago, and it's an interesting place. And crime is certainly a big deterrent for a certain amount of their economy.
Yeah, I'm sorry.
Go ahead.
I just think that Brazil has the infrastructure that the rest of South America lacks. And I think that they'll continue to do better than the rest of South America. I'm not sure how much money you'd want to put into Brazil, unless you knew really well what to expect from
it. I agree.
Right. So, Norbert, as we wrap up this segment, things are looking pretty good, but you mentioned maybe we're at a peak. As you look across 2021, and everybody's very hopeful that 2021 will be a good year, does at a peak mean we could fall below 50, or are we still going to be above 50 for most of the year?
I think we're going to be above 50. What you're going to, all of these markets tend to revert to the mean, which means the PMI, the mean for the PMI is about 52.5. And so if you bet on the over and under 1.5 points on both sides of 52.5, you'd probably be pretty close to what we probably will average for the balance of the year. And that's all dependent upon COVID and how quickly we respond to it. I don't know whether you remember the book Catch-22.
Oh, yes.
One of my favorites of all time. And Catch-22 is you set a goal, and as you get close to the goal, you move the goal line further so that nobody ever reaches the goal, but they all have to keep working at it. And with the vaccines, I feel like we have a Catch-22 situation. No matter what we do, there's something else now that we have to overcome. There's a new strand of the virus that we have to worry about. It's a super breeder of the virus. And so I worry about those things, which is ridiculous because I have no control whatsoever over any of it. I ought to find other, I ought to get a life and find other things to worry about. But I have to warn my clients that something is amiss.
Yes, clearly. And what does GDP look like for 2021 if we're operating at the mean?
I think, right now, the Atlanta Fed has a GDP Now website where they project what it's going to be. And I found it's as good as just about any in terms of what they say. And they're predicting, a reasonable year in GDP. Again, there's a lot of things that can screw that up. Our relationships, some of the relationships that were blowing up, we had positioned extremely well to be able to negotiate from a position of strength. And we've kind of thrown up the white flag and said, all we want is what you think a fair deal is. That's the customer you'd always like to have, right?
No doubt. Well, Norbert, thanks again for joining us with your input on this very important report that you put together. And we look forward to chatting with you again next month.
Very good. Thank you.
Great seeing you. Stay healthy and stay safe.
For all of our listeners, stay healthy and stay safe. That means you're probably at home. So check us out at mfgtalkradio.com or go to jacketmediaco.com where you can see links to all of our shows. And thank you for joining us on this episode of Manufacturing Talk Radio with Now a Little TV.